Hey folks, welcome back to the channel. My name is Jason, host of Fighting Words Financial, and just here with my daily update on markets. Put out a video this morning going over Upstart's earnings, went over the positives and the negatives. Take a look at that video that I did earlier today. You may be interested in it. Upstart had an absolutely horrible quarter, but most of it was due to a one-time charge, meaning that they disposed of a loan portfolio at a loss. I kind of go over that in the video, and I think that it represents a buying opportunity. I've said this a couple times on the channel before, but I am slowly acquiring Upstart. I did a little bit more acquisition today. Now I have close to about 300 shares of the company out there. Probably looking to keep acquiring over time. And if you guys ask questions about that, I'll go over that a little bit in the live stream today. But I did do a video on that this morning. So go ahead and check that out if you get a chance. Wanted to take a look at markets as markets are coming to a close right now. Pretty much everything is down across the board, but not by very much. I think a lot of people are just sort of waiting with bated breath until inflation numbers come out later on this week. We have some good news on inflation. We have some bad news on inflation, but we do have some really good news when it comes to food prices, but we have to see if that's really going to stick around. But markets down. Dow Jones is down about 42 points right now, about 0.1%. S&P 500 is down about 14 points right now, down about 0.4%. The NASDAQ 100 down about 127 points. It's much more volatile than the other indices, down about 1%. And the Russell 2000 down about 1.6%. There were a few bright spots in the market today, of course. Energy up about 1.5%. Utilities about 1.1% up, real estate up about 0.5%, and financials up about 0.5%. Look for financials and energy to outperform the rest of the market going forward over the next couple of months. Particularly financials right now represent huge opportunity. I'm not just talking about fintechs, of course. A lot of what I'm putting out there is regular traditional financials like Morgan Stanley, Bank of America, Wells Fargo, and all of those things. Happy to answer any questions you guys have up front. This is me today, by the way, running on about 6 cups of coffee and nothing else. So let's get started with the questions right away, and we'll go into some of the stuff that I've been looking at this morning. So, hey, Jason, are you putting in a stop loss with Upstart purchases? Are you happy to ride the bumps? So not putting any Upstart, purchases, any stop losses in right now. I am using puts to acquire. So I did just outright buy some shares today, I bought about 150 shares today. I did put in puts for significantly lower price going out as far as, I think, October 21st. I sold some 20 puts out there. So happy to acquire Upstart anywhere in the 20s at this point. I'm really looking at 5 to 7 year time horizon on this. I think that it returns to triple digits here within the next 2 years. And I don't even think that's going to be a stretch for it to return to triple digits in the next couple of years or so. But that's still going to be pretty far down from their top end, which was close to $400 a share, maybe been over $400 a share. But yeah, Upstart actually looks solid as a business going forward. Their loan portfolio, I went over some of the risk metrics in their portfolio performance, and it looks fairly good. At least it's not any worse than using FICO. In fact, the evidence is showing right now that it's doing a better job at predicting defaults than just FICO scores are and traditional metrics. So Upstart, I think, looks very good for a long-term investment. Over the short term, though, if you can't stomach volatility, it's probably not something that you want to look into. But yeah, so another thing I want to address was the stumble in SoFi today, and that's really related to Softbank deciding that they were going to sell a bunch of their shares. Now, I think they still have something like 84 million shares out there, but they did sell a couple million shares, I think 9.2 million. And a lot of it has to do with this. Mayoshi-san, ashamed of focus on profits after Softbank logs a record $23 billion loss. So SoftBank right now is they're basically a major incubator firm in the East. Of course, they're based out of Japan. They do a lot of business funding tech businesses in China and Indonesia and in the United States. They made a ton of really risky investments over the last couple of years, really focused on technology. And of course, that has come back to burn them. So expressions of shame, public expressions of shame are more common in some cultures than in others. I would definitely read something into this, but I would not go overboard on this. Mayoshi-san says, if we had been a little more selective and invested properly, we would not have hurt as much. That's kind of a stunning admission. And this is really for SoftBank's flagship Vision funds. And they're going to go through a dramatic cost-cutting operation here after plunging technology valuations, and the weak yen drove Mayoshi-san's embattled conglomerate to record a 3.1 trillion yen or $23 billion quarterly net loss. In a press conference that Sun himself described as depressing, he admitted that his famously aggressive global investment strategies should have been more selective, adding, "I am ashamed of myself for being so elated by big profits in the past," which I think is kind of if this was an American CEO, this would be a stunning admission. But like I said, in other cultures, these expressions of shame for bad business decisions, they're more frequently admitted rather than just spun like they are in our Western culture. So, but they suffered an $80 billion foreign exchange loss caused by a sharp plunge in the yen against the US dollar, which fell to a 24-year low in July. That loss reflected the fact that about half of SoftBank's total borrowings are dollar denominated. So SoftBank's Vision funds reported a combined loss of 2.3 trillion in April to June time period, following then the record $2.2 trillion loss in the previous quarter. So they have a lot of restructuring to do, and dumping part of their SoftBank holdings was a part of that. So, so stocks stumble as caution reigns ahead of U.S. inflation data, and that's mostly what's going on this week. Dollar shares slipped, and the dollar hung off recent highs. That's another thing that's hurting U.S. companies right now is how high the dollar is. That's a reflection, of course, of global uncertainty as sovereign wealth funds and individuals see the dollar as a safe haven, and it is strengthening the US dollar. So, fire away with the questions, guys. I'm not going to be on as long today, maybe about 45 minutes or so. But this is some of the other big news that is out there right now with a stock that I follow on my channel, and at least personally. AppLovin proposes to buy Unity Software in a deal valued at $20 billion. This doesn't seem like the best fit for me for Unity Software. In fact, I'd rather see Unity Software not accept this offer. This is an all-stock deal, really proposing a merger at roughly $55 a share, where AppLovin would actually end up controlling about 51% of the voting shares, but the total outstanding stock would actually be controlled about 55% by Unity. But this is an all-stock transaction valued at about $20 billion. The terms of the deal call for each outstanding share of Unity common stock to be exchanged for 1.152 shares of AppLovin. You may not have even heard of this company. And so Unity shareholders would receive about 55% of outstanding shares. And the all-stock merger would value Unity at $58.85 a share with a $20 billion enterprise value, representing about an 18% premium to Unity's closing share price as of Monday. You may actually see the board of Unity reject this deal. There's enough volatility in Unity stock right now that I think it's actually hard to value them at $58.85 a share. I'm also not sure that AppLovin is really just the best fit for this company, right? They estimate that the combined company can generate more than $7 billion in run rate revenue by the end of 2024 and more than $3 billion in run rate adjusted earnings before taxes, before interest, taxes, depreciation, and amortization in the same time period. They're expecting to achieve over $700 million in adjusted EBITDA synergies in 2025. So, like I said, the Unity has already made a couple of acquisitions itself this year that were kind of questionable, including Peter Jackson's visual effects company Weta Digital, and of course Iron Source, which honestly I looked for that to be a real positive addition in terms of Iron Source for about $4 billion. But so far that has failed to pay off in the immediate term. And there was probably never an expectation that it was going to pay off in the immediate term. It's going to take a while for this to pay off. So one of the big pieces of news that's out there for a lot of people that follow technology stocks. So let's look at some good news right now, which at least temporarily is good news. Food prices fell sharply in July, but the respite may not last. Food prices dropped by 8.6% in July from the previous month, particularly because of lower wheat and vegetable oil prices. Ukraine and Russia's UN-backed export agreement and a better expected crop, a global economic slowdown, and a strong U.S. dollar are some reasons behind falling prices, but analysts have doubts over whether prices will continue to fall, especially since the deal between Ukraine and Russia appears shaky. I think that deal is basically dead. Right now, we're looking at satellite photos of Russian ships off the coast of Ukraine being loaded with what appears to be Ukrainian grain. So basically, they're stealing it. At this point, I think that deal's probably going to fall apart. So Ukraine's still going to be able to export grain. It's just going to go overland, and it's going to raise prices. So, so the FAO said that while food prices dropped from really high levels, and it's welcome, many uncertainties remain, including high fertilizer prices that can impact future production prospects and farmers' livelihoods. The important thing to note is that many of the nitrates that are exported actually come from Russia. They're the largest exporter of nitrates. It's not that other countries can't produce nitrates. It's just that they've been doing it so cheaply for so long that most people became dependent on them. Look for the United States and several other countries like Indonesia to kind of pick up the slack when it comes to nitrate export. So, but in July, that index, the food price index, was still trading about 13.1% higher than July of 2021, whereas normally you'd expect about 2.3 to 3% inflation in that index. So, yeah. So, analysts cited a mix of both demand and supply reasons for the slide in food prices, which we went over. The higher U.S. dollar also lowers price of staples since commodities are priced in U.S. dollars, and traders tend to ask for lower nominal dollar prices of commodities when the greenback is expensive. So that widely heralded deal between the UN, Ukraine and Russia, I think that's going to fall apart any day now. So good news, though, at least temporarily, that we are seeing food prices decrease. On the other end of that spectrum, when it comes to inflation, is that Ford is raising the prices of the electric F-150 Lightning by up to $8,500 due to significant battery cost increases. And this is big. This means that their Lightning, which was priced at about $39,500, is now going to be priced, the base model, about $47,000. All reports are, by the way, is that Ford F-150 Lightning is a fantastic vehicle, and it's really set up really well for contractors. But Ford is the latest automaker to increase pricing of its newest electric vehicles amid rising inflation and commodity costs. Tesla just announced that earlier, and we can expect more of those announcements in the future. So, let me know what you guys think in the comments below. I'm just kind of going through some of the big news today as far as what's going on and some of the stocks we love the most, but I'm happy to answer any questions you folks might have about markets. This was very interesting. The crypto winter continues to shave billions from the stock market. And I think that's fairly significant, particularly when it comes to chip makers, particularly when it comes to NVIDIA. NVIDIA is rapidly diversifying their income sources, though, away from gaming and especially into their data centers and especially into their AI technology. So a lot of things going on in the market right now. Happy to talk about everything. So, so I don't find anything wrong, Steve-O, with Marvel Technologies. I don't know why I'm not as interested in this company. I should do a little bit better of a review of this company, and I think I'll end up coming out with a video on them. They do have a better valuation. At least the last time I looked at it, the price to earnings ratio was a lot better. They don't seem to have the breadth of operations that NVIDIA does. That's not necessarily a bad thing, though. Really concentrating your efforts in the areas that you were really, really good in is not always a bad thing. So I will go ahead and probably do a video on Marvel Technologies here coming up pretty soon. So very happy to do so as well. Impinj. Oh, have you guys been paying attention to everything that's going on with meme stocks? Now, granted, this is not something I generally cover on my channel, largely because I don't want to see you guys lose money. And by the time the sort of YOLO gains are posted on Reddit, it's already too late for you guys to get into these things. But yeah, I think that a lot of thing that's going on right now, whether it's a function of people deciding to stay at home and trade stocks and air conditioning, or folks looking for a way to make extra money in an inflationary environment, the meme stock trade is having another moment. And a bunch of things like Bed Bath & Beyond spiked 10% following a nearly 40% gain on Monday. Also, what was it? Coinbase stock was up almost like 90%, and Bed Bath & Beyond shares have exploded 131% in August so far. As a long-term investment, this is not a stock that I would be interested in, not at all. So, interesting question from Martin. So, do you think? Let me see. Hi, Jason. Do you think Chinese stocks are fully discounted for all possible upcoming pain from Taiwan, Evergrande, etc.? From Taiwan, I think that there wasn't much discounting that was necessary. All we're seeing right now is political posturing and saber rattling, and that'll all die down that's all going to die down relatively quickly. In terms of Evergrande and really the banking crisis that's going on right now, I do not believe that has been fully discounted for. But it remains to be seen how much the Chinese real estate market is going to affect other parts of the economy. And I can tell you one thing from looking at a couple of different YouTube videos from people that I really respect and from kind of doing my own research on there, there's a lot of uncertainty right now when it comes to the Chinese economy. I think there may even be some uncertainty when it comes to Xi Jinping's future as a leader of the CCP. I think that a lot of this can really be blamed on the way that he has decided to direct the economy. I think a lot of this, the crackdown, the tech crackdown, was actually not the right place to crack down on, but he did in 2020 and 2021. And the banking industry and the construction industry, which is a massive, massive mess, should have been the concentration of the regulatory bodies. So, but hey, who am I? I'm just some guy talking on the internet here with no responsibilities whatsoever when it comes to the Chinese economy. But there have been some really interesting analyses on the banking industry. They use a fractional reserve system, just like we do, where there's something called the money multiplier effect. And that is not something that I've talked about that much on the channel, other than talking about, spreads, loan rates, that sort of thing. But, the fact that you put $1 in the bank and only roughly 6 to 7% of that remains on deposit and the rest of it is loaned out. So say you put in $1,000 into account, right? 6 or 7% of that is stays basically in the bank, and the other $940 or so gets loaned out to someone else. They go out and do business. That business comes back into the economy. It gets once again redeposited into the bank, and then they turn out and loan that money out, and once again keeping another 6 or 7% on there. So what happens when all of this goes bad? When we have banks with $300 billion that are just simply missing and don't exist anymore? What happens when banks make really bad investments, and also the sort of pre-sale of properties that are being built, and the amount of money that is the amount of life savings that people are putting into properties right now, where there is massive overbuilding going on in the Chinese market right now? There's a lot of uncertainty. So it's going to be very interesting to see how the Chinese government handles this. Now, granted, they have all kinds of tools to deal with the economy that the U.S. government does not, including the fact that they can just do whatever they want to because of the powers that they have. But yeah, so interesting. So Michael Will says CPI tomorrow, PPI on Thursday. What are your thoughts? So my thoughts is we're probably not going to see much of a change from the numbers that we had last month. Next month will probably look a little bit better, but that's really a reflection of what happened in July. Remember, there's always some trailing information here that gets reported as present information when it's really information from the past. So I think that CPI tomorrow doesn't look that much changed from last month. I hope that it does, but it might show a slight decline in CPI, and it may show an even greater decline in PPI in a couple of different areas. So particularly in metals, copper has seen a pretty precipitous drop off in recently. I think that nickel has too. I'm not really sure, but I know lumber's also seen a drop off too. So yeah. Yes, Claire says oil is down a bit, but natural gas is up. Yes, that is because those markets are very different, Claire. Oil is very much a global market where everything is sold on a global market, and natural gas is very much localized. So natural gas being up in the United States, up in Europe, but it actually could be down in other areas of the world right now. But natural gas in general is probably up because everyone's anticipating an increased demand from other sources from Europe this winter. Everyone's already preparing for that. And we've talked about that on my channel quite a bit, that liquid natural gas producers in the United States are probably set to benefit from the Ukraine-Russia conflict, as well as other avenues for countries like Kazakhstan that export a lot of oil and natural gas. They are exploring other options as far as exporting, as far as new export routes, because they view Russia as a less than reliable partner than it was a few months ago. And I think that's only natural. So we are in a bit of transition when it comes to both oil and natural gas. It doesn't surprise me that oil is down a bit. We've seen a bit of a slackening of demand. The summer travel season is over, or close to being over in the United States, and it'll be over at the end of August in Europe. And there are people still traveling in Europe, of course. But natural gas is a more intensely localized market just because of how it is shipped at this point. Most of it is through pipelines, right? Oil is a different story, though. But yeah, and that's one of the things that confuses people about, the United States selling oil from the strategic reserve, and foreign countries are able to buy it. It's sold on global auctions, guys. It's that's one of the things that people don't quite understand, that any company in the world essentially could bid on those oil supplies, and it just happens to be that a lot of foreign countries have won those. So but I expect oil to spike up a little bit more because it looks like we're going to have a really, really active hurricane season, and most of our refining facilities in the United States are located on the Gulf Coast. We do have significant refining capability on the West Coast, of course, and on the East Coast, but the Gulf Coast has the vast majority of it, as well as chemical production, as well as our nitrate production, our native nitrate production as well for fertilizers. So a lot is going to be dependent on how active our hurricane season is. And I think there's a prediction for 11 named storms this year, which could have significant impact on operations. So didn't want to mention that super chat features are on if you guys feel so inclined. Also, I think I finally remembered to put my link to my Patreon in this live stream. Also, I went into greater detail on Upstart earnings in a video that I did on Upstart earlier today. This is one of those companies that I think represents pretty significant long-term opportunity along with SoFi. But don't discount sort of a rotation back to quality here. Look at companies right now that have strong current cash flows. That is one of the ways to mitigate your losses in what's coming forward. I don't know if what we're in right now is a bit of a bear market bounce, or a dead cat bounce, or a bear market rally, but I do expect that we're going to have a lot more volatility going forward, and it's going to last for quite some time. Hasn't stopped me from continuing to acquire. I'm not selling anything. I'm not retreating to cash. Partially, that's just not something that I do. Over the long term, it doesn't seem to be very useful. And when I say it doesn't seem to be, it's not anecdotes, personal anecdotes. I'm talking about, I'm looking at statistical research, academic research that's going on, that long-term buy and hold strategies tend to make you more money over time than trying to time the market. People believe a lot of irrational things. And I think nothing, over the last 10 years or so, that has to have been something that everyone has come to the conclusion to, with the explosion of conspiracy theories in the political world, with the explosion of get-rich-quick schemes, trading schemes, options trading schemes that don't necessarily work. I think that a lot of people realize that that the markets are supposed to be rational, but individual investors are not. So we see here. A lot of Europeans are worried about energy bills this winter. Where do you see energy prices going over the next few years? I think energy prices are only going to rise over the next few years. The investment that both Europe and the United States have to do in diversifying our energy sources, it's not just green energy that we need to be diversifying into. I'm a big proponent of nuclear energy as a source of green energy. I know that's going to blow people's minds, some people's minds. But I also see the energy bills are going to rise as we're making this transition. And as a national security strategy, I don't think that Europe really has a choice. They have to diversify away from Russian oil and Russian gas for the future, because it can't be used as a political weapon against them. They need to diversify their oil sources. They need to diversify they absolutely need to diversify their sources of gas as well. So, and I think Germany is now delaying the shutdown of some nuclear facilities, and they decided that last year at some point, and it looks like they're probably going to keep going along with that as well. So, yeah. So, any questions you guys have, go ahead and fire away. This is a big thing too when we're talking about consumers expect inflation to slow down. A big win for the Fed. So why is that a big deal? We know that inflation tends to react with expectations of inflation, right? Meaning if people expect inflation to rise, it probably will. If people expect inflation to slow down, it probably will as well, largely because that affects consumer behavior. Meaning right now, people are probably delaying purchases on certain things, thinking that prices are going to get lower in the future. So Hal, this is this is actually a politically sensitive topic here in the U.S. I actually had an interesting conversation this summer with someone from Australia talking about all of the COVID lockdowns that happened in Australia where you are. I wasn't aware of just how significant they were, and this was an emergency worker who was telling me about all the times that he had gotten stopped going from, like, you don't call them counties, but going from county to county, and he had to prove every time he was stopped that he was allowed to move and all this. We never had lockdowns to that extent. We are still having COVID impacts in the U.S. It's just that everyone's ignoring them. And we are still having widespread infections here with new variants. I don't want to say anything about like how deadly this variant is compared to the past, but it's going to have an economic impact. I mean, look at the flu. It has billions of dollars of economic impact every year. COVID is having billions of dollars of economic impact every year. This is just something else added to the mix. But I think that for the most part, Americans are going to start ignoring it. Good or bad, they're going to start ignoring it. They're just done with this being a topic of conversation. I wish that we had taken this more seriously from the beginning, but of course we didn't, and now we're stuck having to live with this. So, and this is one of the important things here. I think the market is priced in a 0.5 point raise at the next meeting. I think that is wrong. I think that we'll have another 75 basis point interest rate increase, and I think those are going to continue at least through the end of the year. I think that the assumption that the Fed is going to turn dovish on inflation is incorrect. We are looking at right now we have inflation, we have relatively full employment, we have a labor market that has a lot of pricing power right now. We have fewer people in the labor market because so many baby boomers are retiring, and there just aren't as many people behind them to replace that, to replace those workers. Worker participation, meaning labor force participation, has returned to very close to what it was before. The raw number of people working in the economy is actually exactly where it was in 2019. That's not a good thing for inflation, especially when labor has so much pricing power. Right? We're going to see wage inflation, which is going to contribute to demand, which I wish this was happening under different circumstances is my only thing. Like, I want to see labor have a lot more power in pricing. I want to see them to have a lot more and wages on the bottom end of the scale. But I just wish it wasn't happening during this time period when we're suffering so many different supply shocks. Because I do think that American workers need a bit more pricing power. Like, the phrase that I keep hearing every time I travel and every time there's a labor shortage somewhere, the phrase I keep hearing is that no one wants to work anymore. That is absolutely not true when you look at the number of people in the workforce, when you look at labor force participation, and when you look at the demographics going on right now. What people are really saying is that labor doesn't want to be exploited anymore for less than livable wages, and they have other options. And this, I mean, what was once really paid jobs like being a flight attendant is basically for the last 15, 20 years, if you're beginning in the industry, it's been poverty wages. And this is really what I'm talking about. And as well as teachers. Teachers are able to take the education they have and immediately get a 20% pay raise simply by leaving the teaching profession. And I know a lot of them don't do that for money, but it's hard to turn down a 20% raise. And that's some of the things that are going on right now. So do you think that Unity will accept AppLovin's offer of Um, so after merging with Iron Source, I don't think so. I think they have a duty to propose that to shareholders, and I think that shareholders will probably vote that down. I would vote that down because I don't think AppLovin is a great business partner for Unity. So I think that there may be a bit of an arbitrage opportunity here in one direction or the other. But my prediction is that this merger does not happen. My prediction is that the board may vote it down, or they may put it to shareholders. Either way, I think it gets voted down. I think that AppLovin has bitten off more than they can chew. I don't think that they have the expertise to do this. And I actually don't think they have the money to do this either. So I don't know who's financing this deal. It would be a great deal for AppLovin, and I don't think it would be a great deal for Unity. So that is my opinion on that. But yeah, so yeah, a lot going on in markets today. Oh man, I've already been on for half an hour. Okay. Yeah, a lot going on in markets today, even though it doesn't necessarily seem like it. And we're going to get numbers on as far as inflation goes today and tomorrow. As long as the numbers aren't horrible, I think you can expect another bump up in the market. And it depends on how horrible they are. If inflation numbers are high enough that people anticipate, they sort of reprice their anticipation for a 75 basis point rise, I think that we're going to see further declines in the market. If they come to the realization that inflation is such a threat to long-term growth in this country, or not just this country, but to the worldwide economy, that they anticipate that 75 basis point rises are going to continue through the end of the year, I think we're going to see a retest of S&P 500 at 3,600. I think it'll get closer. I think it got a little bit. I think it was like 3,650 is the lowest that it got in June. I think we may see a retest of those numbers later on in the year. I think the composition of where that happens is also going to be relatively similar, meaning that tech shares are going to bear the brunt of that. So, yeah, so key inflation. Yeah, everyone's talking about this key inflation report looming. Yeah, so very interesting things that are going on right now, and fevered inflation spirals seem to be on the mind of everyone. But the fever inflation spirals seem to be breaking in July with lower energy prices. Could be. Want to see how permanent that is. Hello, Jason. I maintain a sizable position in BYD. Do you feel they are less vulnerable? So I think they're a less vulnerable investment than XPEV or than XPeng right now, because they're already just traded over the counter or in H shares. So the discount for being, I mean, you can't get any further delisted than that, right? They're not traded on a major exchange. Like you have like I said, they're traded over the counter at this point. And they also have an H share. So it's BYDDY and BYDDF. So they're less vulnerable as an investment than XPeng is. So I think somebody recently just announced that their secondary offering was approved on the Hong Kong exchange, which I think is an indication that all of these companies right now are planning they're planning at some point to be delisted. And I said they're not planning absolutely that's going to happen. I think it's just a smart move to mitigate the impacts. Let me see here. Axon at 44 cents a share beats by 5%. Revenue of 285 million beats by 26.65 million. Yeah, Axon is a company that I covered last year. The video got almost no traction, although I actually think it's a really interesting investment opportunity out there. If you guys don't know what Axon is, basically anytime you see body cam footage being worn or from the police, that is usually an Axon product. It's actually advertised in there. Usually the bottom of the screen, you can see that Axon on the screen. But that's not necessarily where I think that their future earnings growth is going to come from. I think it's going to come from evidence.com. And I think it's going to come from their AI capabilities and making connections between disparate sets of data. So there's a huge AI component to Axon that doesn't get a lot of press. And I think it's I need to understand a little bit more about this business on it before I comment further. But yeah, I think thank you for bringing that up. That is not something that I've covered in the past. I know it's down significantly from its highs of last year, and it also may represent a buying opportunity. The best buying opportunity, though, that I see right now for myself personally, once again, this is not a recommendation to buy, sell, or hold any security, but the best opportunity I see right now is with Upstart. Okay. So did you cover Invitae in your biotech stocks? Wondering how much you know about the company. So I covered Invitae in 2 videos about 2 years ago. My problem with any of these stocks right now, and here's the issue, is that I've covered a lot of biotech stocks, and so I think that it's almost comical for people, like a regular person out there with no knowledge of genetics and no knowledge of how this is going to be applied and monetized. I think it's almost comical for people to go out there and try and pick businesses based on Kathy Wood liking them or something else, right? A lot of the genomics companies that are out there right now are really just data gathering warehouses. And you're looking at, Ancestry.com being like that, 23andMe and Invitae. Their whole shtick is that it's the data that they're collecting that is going to be really valuable one day. And they're trying to lower the cost of their DNA test kits to get them as low as possible and to make it up on the back end by selling insights derived from the data, right? At this point right now, we don't know how long it's going to take for Invitae to be able to monetize their giant database of DNA that they have. Because when you use one of their test kits, your DNA gets stored. It's stripped, of course, identifying value, but they know a lot about you besides just your genetic code. What they know also is the things that you experience, the illnesses that you suffer from, the tendencies you have, all those things. All of those may have a genetic component there. And look, when DNA was first decoded back in the mid to late 1990s, it turned out to be one of the least impactful discoveries at the time. There was nothing really immediate that came out because people looked at it like this: oh, we're going to be able to know which gene affects what, thinking that there was a one-to-one relationship between genes and expression of traits or susceptibility to diseases. Well, none of that was true. And people involved in genomics knew that wasn't going to be true. It was going to be the interaction between genes, and sometimes one gene interacting with thousands of other genes that was going to be important. And really, we don't have the ability with merely our brains to decipher or understand these different interactions. And it was going to take computing power in order to do this. So Herman Wynn, Coinbase and BlackRock partnership, comments, ideas, and thoughts. Herman, I actually don't know anything about the Coinbase and BlackRock partnership. This is the first I'm hearing about it. So I will take a look at that and I'll comment on that on a later live stream as it is appropriate. So, but yeah, thank you very much for that. That is something that I didn't know, that there was a relationship between Coinbase and BlackRock. So Coinbase may also represent a pretty decent opportunity right here. Their company is, of course, the company stock, of course, is directly correlated to the price of Bitcoin and the price of cryptocurrency in general. It may be an opportunity to snap them up, sit on that stock for a couple of years, and dispose of it when cryptocurrency returns, if it returns. I mean, I think that it will, but there's no guarantee that it will, right? And honestly, I think that buying a stock in a cryptocurrency exchange like Coinbase may actually end up earning you more money than buying any particular cryptocurrency or risking a lot of money on cryptocurrencies. Coinbase is going to continue to perform well based on transaction volume, and as transaction volume rises, you're going to see their financials their financials improve. So, yeah. So happy to address things like this, but I don't know anything about the Coinbase and BlackRock partnership. I'll be looking into that. And I hope you guys don't mind when I say I don't know anything about a certain subject. I'm not going to pretend like I do. But back to Invitae and Biostech picks. I actually just use ARC-G as an investment. I look at this as like a 10 or 20 year investment. I tend to buy 1 or 2 shares a month of this. I think that if you are not a specialist in the field, a specialist in the field of genomics, that you probably don't know enough to evaluate whether or not a certain business approach or certain technology can actually be monetized. You probably don't know enough. Like, I'm actually fascinated with DNA data storage right now, which Pacific Biosciences is working on. I think that there's going to be massive implications in the future when we start running out of hard drive space worldwide. And there's already a calculation that in 100 years, we will not be able to produce enough hard drive space to store all of the data that we're creating and collecting, right? That worldwide will just be out of space. There has to be a new method of data storage. And DNA data storage, and that's what DNA is actually. It's a method of storing information, and it's a method of storing information from the universe, essentially, not just about life, but about the universe. And more interesting information on this is being derived right now with something called assembly theory, which is the brainchild of someone named a physicist named Sarah Walker and a chemist named Lee Cronin. They did an interview on the Lex Friedman show, which I think is really worth listening to. It's about 3 hours long, and it's a debate between the three of them as much as it is an interview. But it may turn a lot of the thoughts that you have about the universe on its head. Like physics is just one of my many hobbies that I like to think about all the time. I don't claim to be an expert in it, but assembly theory actually gives you a better insight of what DNA actually does to a degree in terms of information. And when you realize that companies like Pacific Biosciences and a couple of other companies, that they're actually actively working on this, meaning that they have taken the DNA from not from viruses, but from bacteria, which are many times more complicated than viruses. They've actually inserted images, like pictures of images, like JPEG images, into the DNA of bacteria, and waited a couple generations for that to reproduce, and then they've been able to extract that image back out of the DNA with 90% fidelity. So imagine if you're writing the right now data is stored in ones and zeros, which means it takes up a lot of space. When you're using DNA and not necessarily having to follow the sort of bonding mechanisms needed for actual DNA, you could store energy in a lot more dense manner on that, write it to a hard drive or something else, and it would essentially be there forever. It's extremely long lasting. So Pacific Biosciences is working on this, as well as a number of companies out there. So let me see here. Not every day can be green in a bull market. People need to relax. Yes, I'm not really convinced that we are actually in a bull market, and that this is really maybe a bear market trap or a dead cat bounce. I'm cautious in this respect. I'm still buying, but I'm very cautious in the respect as far as how much risk I'm taking, particularly when it comes to selling covered calls right now. I don't want to be too aggressive with my covered calls right now, because if we are not in a bear market trap and the market does take off, I really don't want my shares called away. I tend to be really cautious when I sell those, just to generate a little bit of income, meaning that I really don't want them to be exercised. Yeah. So just on that theme, when we're talking about genomics, the hype has died off around CRISPR. Was all that rage somebody back claiming it would fix most? So CRISPR is just one method right now for editing the DNA of living cells. There are a lot of other methods that are being tested right now, but it is the one that's actually gaining the most traction when it comes to a number of different things, especially cancer cures that are being worked on right now. But a lot of those are years away from monetization. I don't know that the hype in the scientific world is certainly justified. In terms of the business world, I'm not sure that it actually is. It's not clear to me it's clear to me how this process is patented and who takes credit for it, or at least now it is, since the legal case. It's not clear to me like how they're really going to be able to control that process over the long term, how they're really going to be able to enforce their patents over the long term. Also, I think let's remember that patent was filed in 2011, which means that they only have a few more years, or maybe it's 2012, but they only have about 7 more years of patent protection on this process. So their main source of income is going to be opened up to the public domain in a few years. So Claire said, was this the most recent Lex Friedman podcast? No, but you can just look up Lex Friedman, Sarah Walker, and Lee Cronin, and it'll come up. It'll show the 3 of them, or at least the 2 of them, on the thumbnail there, and it's talking about. And he puts aliens in all of his titles, but this is less about aliens and more about construction of the universe and the universe as an information storing mechanism. And assembly theory. which I kind of object to them calling it theory at this point. It's more like assembly hypothesis, but coming at it from both the angle as a physicist and the angle from Lee Cronin as a chemist, I think is very, very interesting. And they're working on this together. But I would say that Sarah Walker is probably the leading researcher in this respect, and that she should probably be listened to a bit more than Lee Cronin should. And that may be a bias on my part, right? But I really enjoyed that one. And she did an earlier podcast where she talked about one of my favorite hypotheses when it comes to abiogenesis, and completely destroyed it. And I, of course, being objective, I have to respect her expertise. And her entire objection on that was really just the likelihood of that happening, the statistical probability of RNA hypothesis or RNA world hypothesis being the origin of life. She seems to think there are other possible origins out there. So and assembly theory kind of fell into that. So I didn't know anything about assembly theory when she did that first podcast. When she did the second one, it really kind of explained her earlier reasoning. But this could actually, like I said, have huge implications for DNA data storage going forward. And looking at companies like Pacific Biosciences that are working on this technology, there's all kinds of academic work that's being going on right now using the DNA of living creatures to store data and then reading it back out, which I think is really interesting. So back on the monkeypox thing, guys. For some reason I had 2 emails asking me about monkeypox and what I think the impact on the economy is going to be. Very little. I think the impact on the economy is going to be very, very little at this point. It's just not the threat that COVID was. It's not a respiratory disease. It's certainly a threat for people that for certain people out there, but it's not going to have the same economic impact that COVID does. Not saying you shouldn't take it seriously, but yeah, I don't think it's going to have an effect. But that was something that I surprised. So, here we go. Interesting news here. Roblox misses on top and bottom. Shares dip 14%. Roblox has gone on a tear in the last month or so, and they've actually absolutely been killing it. Looks like they're down 14%. They reported 52 million average daily users, about 1 million shy of the street account consensus. Losses per share 30 cents versus 21 cents expected. Revenue 639 million versus 644 million expected. So shares fell more than 14% in after hours trading. I wouldn't necessarily read too much into this. I think that this company is probably not going to grow as fast as some of the expectations were a year ago. I still think it's going to have solid growth over time. And they're going to find, most importantly, they're going to find new ways to monetize this business. So, but average bookings per daily active user was $12.25, down 21% year over year. That is a distressing sign. That's probably, that's probably the most distressing part of this report. Haven't had time to do a deep dive in the earnings, though. I don't know if you guys are interested in that. I did a deeper dive into Upstart earnings today, and that video has not done all that well. But I think it's very important, and I like the company, so I'm gonna keep doing that. Anyway, I have reached the end of my allotted time today. I actually have to take my daughter to volleyball practice here in just a bit, and I need to get going. But I wanted to thank you all for attending today. And I think I'll be back tomorrow, and I'm pretty sure I'll be back on Thursday. I'll let you guys know tomorrow morning. Thank you very much for tuning in, as always, and I'll see you next time.